Traders, thanks for joining me in this Sunday sort of market recap as we transition into trading beginning the 31st of March 2014. What I like to do is just take a look through some of these watch lists which I've created, which are just filled with some individual companies, not really in any particular industry or sector, and just have a look for any trade setups which are starting to set themselves up for us to trade leading into April 2014. So what we'll do is we'll start at the top here. We'll start with BRK. That is Berkshire Hathaway. These are the Class B shares retailing at about $123.53 at the moment. So really what's happened is that we've established a really nice breakout of this channel, which has really been in effect since June 2013. You can see this messy sideways channel. We've broken out as at March 2013, and we're just setting up a little bit of a consolidation before what I believe to be is the next bullish move higher. All we really need to do at this point in time is have a look at our exponentials, and this is really where price is sort of starting to interact and move with and against that 10 and 20 exponential moving average. So what we can do is just set this trade up at 126.06. If price breaks above that, we can trade bullish and continue in the clear directional trend, which of course is bullish. No bearish trade in the face of these advancing 10, 20, and 50 exponential moving averages until we get a close below $117.85. We'll have a look at CHK. CHK, not a whole lot to talk about. It is moving back up to this gap fill, which is going to act as resistance. Really not interested in it until it breaks about $27.58 a share. Here is CNX. Now, we had this bidirectional setup on CNX, very close to triggering bullish. However, look at what we saw on Friday. We have what we call a bullish engulfing candlestick pattern. This is the strongest reversal candlestick pattern. So what we have to do is actually look for new entries to enter in bearish in the event that this is now what we call a double top. So any movement below $38 is a really good opportunity to start selling short, and we're looking at targets down to about $36. That's where the next support level is going to come into CNX. What we need to look out for is earnings that is fast approaching, and it's coming out on the 21st of March. So that is something to obviously keep an eye on. CSIQ, a little bit of a bearish breakdown below our trigger at 31.12. We could be setting up what we call a nice bear flag. So that just breaks down bearish. Volume is definitely indicating that we want to move lower. We do have a doji right at that support level. As I said, an inside day. It is almost a Morningstar reversal candlestick, but I'm not paying too much attention to it. The exponentials are going to act as resistance. We're making a series of lower highs and lower lows, which is good. We are technically in a bearish trend. We have broken that double top. We've come up, we've retested the old neckline, and we failed it. So, I mean, this is definitely set up to move lower. Ultimate target on CSIQ is down here at $26 a share. DE, now this is something that is starting to get nice structure around it. A little bit messy anyway around this level here, but we're starting to get that structure. If we break above about $89 a share, $89, sorry, and 48 cents a share, then I'll be looking to trade this bullish up to about $92 a share or $91.60. That's a really nice bidirectional trade setup on DE. Be interested to see how that moves this week. Let's have a look at FSLR. Now, FSLR was a little bit of a surprise packet 2 weeks ago. Got this very incredible bullish breakout here, which I do believe obviously was fundamentally driven from some form of news statement. I haven't followed that up. It doesn't really matter as a technical trader. What's actually happening now is that we're just retesting or just actually resetting for the next leg higher. Now, what usually happens is that we reset into those exponential moving averages, and really just based off this one candlestick, they are still going to be quite a way away. We're really only starting to come down and tag the 10. I mean, that's how far away we are. And really what I expect this to do is to simply just move sideways, maybe even retrace a little bit into that 20. And that's when we can look for the next buying opportunity as price breaks higher. So FSLR is off the radar a little bit today. Garmin, hanging up all around our bullish trigger here at 55.71. Not a lot is going on in Garmin. It really isn't. We're just slowly trending higher. We do have what we call a shooting star candlestick on Thursday. That is a little bit of a problem. So if you are in the trade, just mitigate your risk, move your stop up to a place which is appropriate and in line with your own risk sort of mitigation and your own risk management controls. What I'd be doing is moving my stop up to about 54.21. That is below, if I can just change this to red, below the 10 and the 20 exponentials in a really nice location, and we could just bounce around here for a little bit, or of course we could just continue higher. LLY, not really a whole lot to talk about. You can see the bullish and bearish trigger 55 and 60.52. LinkedIn moving lower. We do have what could be a little bit of a double bottom setting up. So what I can do is bring down a bearish entry below 176 down to 165. The bullish side is going to be when we break above that neckline, okay? And that's really going to occur about $208 a share. So that's the basic setup on LinkedIn. Oracle, very close to breaking out. You can see we've got a nice little oscillation into the exponentials. We're getting a nice bullish bounce. It looks good. It looks good. So this 40-12 will probably trigger this week. Pepsi, more bearish on Pepsi than I am bullish at the moment. We do have a shooting star on Wednesday, a little inside day on Thursday, and then a little bullish candlestick on Friday. We are at this resistance level, and if you're looking for a reversal, this is the location, pardon me, where it's going to occur. So I'm going to scoot this bearish entry up now, and I'm going to move it up to $80.81. This could definitely trigger this week, and it could trigger bearish down to support about $77. On the bullish side, if we break above about 83, 84, then we're trading bullish up to $85.42 a share. Solar City, breaking down almost. I mean, these triggers, pardon me, on Solar City, they were based when price was up around this level here. And we were talking about support levels had to break. We were talking about the long-term trends that had to break also before we entered bearish. What we wanted to see was a close and a continuation below this entry. We haven't actually seen it. So you shouldn't actually be in the Solar City trade. Now what I can do is bring this down and say that if we get below 56 intraday, then we'll be trading bearish in the direction down to $50 a share. So that is a $6 move, which will translate to about 12% on equity price, which will translate to, I don't know, somewhere probably around 140, 150% on option price. So very, very incredible downside potential on Solar City. It's all about just getting in at the right area, the right price at the right time. SE, again, very similar to Solar City. We had to break support, had to break that rising bullish trend line. We had to get it closed and a continuation below. Did we get that? No, we didn't. So this is in the right location. This could be a nice buying opportunity. So the trade in and of itself still stands. 32.58 bullish up to 34. Bearish below 30.81, moving down to about $29.90 on SEE. Soda appears to be breaking out of this sort of symmetrical triangle, which has been setting up since February. You can see the basic setup. You can see the symmetrical triangle. What I need to do is switch to the Bollinger Bands, and they're not really giving too much away at the moment. So it's not really a trade to go to. You can see it's just flat. It's just moving sideways. And it's just not really offering a lot of opportunity to traders. Talk about Target. Target's looking okay. We were talking about how we want to see it hold the exponentials, and that's what it's done. And while it's holding the exponentials, we want to make sure that the oscillators have reset. Now that's exactly what's occurred. We've seen the stochastics across bullish, the RSI is bullish, and the MACD again, it's pretty neutral at the moment, but the histogram is definitely ticking down, moving closer to that signal line where we get that signal line across. So what we can do is look for a better entry in Target. Now this is all about trade management. And the thing is, as we have a look at it, I want to bring this entry down to about $60.60, but I've got that declining 100, which is going to act as resistance. So I really need to bring it up to about, I mean, honestly, it has to stay about 61.70. It's a little bit of a bummer because we do have that intraday sort of movement over here that I want to clear before we get in bullish. So really the trade has to be 61.70 up to about $63, and then all the way up to 65, 68, 71. Then we're talking about levels about $73 in Target, which we could well and truly trade at in the coming months. So that's a pretty comprehensive wrap of 15 shares. What I'll do, I'll upload another video now. If you want to learn how to do this for yourself, sign up at pivotpoint-trading.com. The link is in the description, and you get a trading scholarship anyway to actually learn how to trade and invest in the stock market. All the best, everyone. Goodbye.